Hello and welcome to Wake Up and Smell the Mic S&P 500 review for Thursday, April 20th, 2023. It's now 6:30 a.m. Central Time. We start off in the S&P 500 daily chart in DeMark looking back to end of December 2021. I'll zoom into the current area now. The S&P 500 daily chart has printed the combo and sequential sell setup 7 count, and to negate that for end of day today on the 20th, there must be a close below 4137.64 for the price flip to the buy setup count 1. Price in the pre-market hours for the S&P 500 at 6:33 a.m. on the 20th is 4127. So price will more than likely start out the day under that level. But like yesterday, here the price ended up above this level 4 bars back, and then the 6 printed for combo and sequential could do the same thing today. It really needs to do that as it's really struggling to get the 9 setup end count. And if it does print the 9 setup end count eventually, that is a show of strength and more upside will ensue. If it doesn't, I'm going to start lightening up a bit on longs from lower levels. The ongoing supply line for today is at 4191.94. And to close above that level will qualify the supply line end of day today on the 20th. Same thing with the ongoing demand line, which for today is at 4112.12. A close below that will qualify that level. Keep going. The trend factor down 1 will get qualified also. And again, the lower Stark band and the channel 3 low are traveling together still, so there's good last ditch support there. And the Williams %R that was introduced in the previous video is still in an extended overbought state, similar to back here in August of 2022, so it can go on for quite a long time before it heads down, but eventually it has to come out of this overbought state. And the psychological line, which is also introduced in the previous video, is still at 50, indicating about as many buyers as there is sellers. So anything 50 and above, there's more buyers than sellers. Anything 50 and below, there's more sellers than buyers. And it certainly does take a lot to get it above its overbought line at 75. And it did back here at the end of March. And we'll take a look at the comparison of the bearish divergences from the current time period back to August of 2022. You can see it here, the price headed up and the MACD histogram headed down along with the ultimate oscillator, and it was the same thing back here in August. And the daily cloud conversion line has been going sideways for a few days, so this should be pretty good support. If it breaks under the 4119 line here for today on the 20th, that will be an ominous signal, and I'll be lightening up on longs from before, like I was saying about losing the sell setup count. The NASDAQ 100 NDXHILO chart shows the 5 EMA came 3 cents short of going under the 10 EMA in red over here. 5 EMA 87.87, 10 EMA 87.84. It looks like the index line itself in dotted here is still going sideways, and the ROC 12 made it down to negative 7.89. So if it does go under today, this blue under the red, that's not my sell short signal, as this will more than likely end up the day below -5, so it's plus or minus 5 from 0. There could be a serious downdraft, but nonetheless it's just not my signal. However, the NASDAQ Composite High-Low Index shows the ROC 12 well above 0 still, 16.23, and the blue is quite a distance away from getting under the red also here, but the red is still riding on top of the 21 EMA. So if this blue can make it under the red and coincides with the ROC 12 plus or minus 5 from 0, then I would reconsider shorting the big guns inside of there. And the New York high-low index looks a little better than the NASDAQ Composite, similar but definitely performing better. The index itself in dotted has ticked up a little yesterday, so maybe the value play is back on a bit. However, the NYA to SPX ratio, basically value versus growth, does not corroborate that thesis. It actually ticked down a little bit, so value did a little bit worse than the big techs yesterday, and it's somewhat going sideways, so either everything is doing really bad or really good or nothing at all. In other words, everything is traveling together these days. The S&P 500 support and resistance levels big board chart shows the gray areas at the daily conversion line, ongoing demand line, and S2. And price has deteriorated in the pre-market hours at 7:15 a.m. on the 20th, 41.20. So it's resting right on top of that daily conversion line, and it had better hold, because below it, the closest level is in the 4000 zone at the daily horizontal support, and then the weekly diamond bottom extension perfect uptrend channel line at 4162. And now you understand what I mean when I say I will be lightening up on a sustained move under that daily conversion line. It has to look pretty strong though to get under there and have a strong move below it for me to lighten up on some of those early longs. So to the upside is the S1 and the pivot point, and the ROC 1 is right at 0, -0.01, and pointed down, and the ATR2 is at 31.03 and pointed down. So they're both in the middle of their green zones, and that would definitely change on a break below this daily conversion line. And the PPO extreme is okay at 3.61% above 0. And the instruments in the New York traditional McClellan breadth oscillator to get back to 0 would require 917 decliners over advancers to get back to 0. So it's close to the 0 line. Have a great day.